It's good to be back up here for round two on the second day of this lovely event. I'm glad you're all here. It's a beautiful November day, so it's somewhat tough to convince yourself to be inside when we know that there are not that many beautiful days probably in the future. But thank you for being here. I usually use my second talk at the Metals Investor Forum to talk about the companies that I own that are here. And the reason that I do that is because you guys are inundated with information over these 2 days, like just nonstop. And so it's quite difficult, I think, to remember the thing about like the standout thing about any particular story. So my goal is to give you the 1-minute investment thesis for each of the companies that I own that are here. And this time I thought I'd structure that a little bit. Instead of just going through the list of companies, I wanted to talk just for a moment before about structuring your portfolio. And I'm not trying to say that I know what your portfolio should look like, because that depends entirely on your risk profile. But what I am saying is, if you're here at this event, you probably like high-risk exploration stories, because that's what there are a lot of here. So I'm just guessing that you're inclined that way. And it's really easy, especially at an event like this, to fall in love with a lot of those stories. And that's okay. That's what we're here for. And those stories do offer that incredible upside that is the reason that we play in this sector. But at the same time, even within those high-risk stories, I think it's worth taking a step back and looking at your portfolio to see, are there multiple ways that you can win with that set of companies? And so by that I mean you need to think about having not just exposure to gold, but also to copper and also to zinc and uranium if you're interested, energy metals if you like them, but have some diversity in the commodity exposure. Have some diversity in the range of stages as well. So not all companies that have yet to even test their geophysical target, but also ones that are growing their resource, ones that are farther along the process. They're just different ways to win with all those different stages of companies. And then there's some other business models out there that you want to also incorporate. Again, not only the single project explorer, but also the royalty generators or the project generators. Just take a step back and think within your high-risk playbook, are there multiple ways to win? And with all of them, you certainly want there's characteristics that you want from all of them, right? You want to have a good share structure, and I would say tight. Tight really matters for the early stage explorers. If they're just setting out, they better have a tight share structure. If they're all the way to building a mine, it doesn't need to be 30 million shares out. That would be impossible. But it needs to make sense, the share structure. There needs to be good long-term shareholders. The company needs to have access to capital. And hopefully there's more than one way to win. And by that I mean, it isn't just hit a discovery and that's the only exit plan. Like, is there strategic interest in the area? Is this a commodity that's in need? Are there partners that might come in to fund? What's the sort of business plan? Put on your entrepreneurial cap and think about what's the business plan here, and is there more than one way that this could turn out well? And at the end of the day, does management have a clear and detailed plan to create value? That seems like an obvious statement, but we do live in a world full of geologists who fall in love with rocks. And that's fine. There's lots of rocks out there that you can fall in love with. But it's one thing to have ideas about what these rocks might contain, and it's another thing to have a clear and detailed plan about how to use shareholder capital to create value. And if the first plan doesn't work, the drill hole doesn't work, the anomaly doesn't work out, what's the fallback plan? It takes more than you might think to have that detailed plan, but that needs to exist. That's almost the first requirement. And so when I look at sort of that list of having that range of types of companies in your portfolio, that range of ways to win, I would say that the companies that I own that are here at MIF cover a lot of those bases. Not all of them. If I use my full portfolio, it covers all of them. But this is how I would rank them according to some of those categories. So discovery potential, or already a discovery, sort of the discovery that has a strategic or regional opportunity going on. Are they in the stage of growing or demonstrating resource value? Are they planning a mine? Are they building a mine? Are they a royalty company? So I'm just going to go through the companies now and give you that 1-minute pitch for each company. It's going to be quick. I'm probably going to say less than is on each slide, but the idea is just what's the one thing that I would want you to remember if you're looking back and looking at Allegiant Gold. So Allegiant Gold is this really interesting portfolio of projects in Nevada that was put together by a Nevada exploration legend named Andy Wallace. He gathered these over a decade. They've never really seen dedicated exploration money. Now Goldcorp has put money into Allegiant, and they're drill testing 6 of these projects for the first time. And this is, of course, in Nevada. So Andy's a legend in Nevada. He's discovered many millions of ounces. He's produced many millions of ounces there. So there's a really solid credibility for where these projects come from. And then to back it up, Eastside has this advanced asset called Eastside, where they're having good success expanding the resource. And the graphic there shows the resource within the pit constraint on one side, and then with the drilling, how that's growing on the other side. So then there's Great Bear. Great Bear probably stands out in most people's minds already. Perhaps I could even skip over it in my descriptions, but Great Bear is the standout high-grade gold discovery in Red Lake. They started out with pretty consistent hits across a long structure. They used that to develop a model. As they're drilling, the model just keeps working, and it's looking more and more and more like Goldcorp's high-grade zone, which is the deposit that turned Goldcorp into the company that it is. This is a very significant similarity. They have really impressive discoveries along a long strike length. Drilling so far has been quite shallow. Gold in the region goes deep. They've only drilled 50 holes to date and had great success. Now they're embarking on 150, so you can see what might happen over the next little while, and a very tight share structure which amplifies the moves when they happen. Troubadour, we are going to hear from shortly here. I put this in the discovery potential category. So certainly the high risk end of the spectrum. They haven't tested their project yet, but they are going to have drills turning very soon. And those drills are going to be testing a trench that got lost for many years. So this trench is a really good trench, like almost 0.9 copper over 125 meters. That is worth following up on. Several companies tried to follow up on it, but it was mismapped in the files, and so they couldn't find it. So Troubadour went back, scoured the area, found the trench, staked the ground because it was available because nobody knew where the trench actually was, have spent the last little while doing the background work, the geophysics, the soil sampling. It all lines up with the trench. They have a model. The target here is a copper-rich porphyry, and the drills are going to start turning soon. One reason to be excited about a copper-rich porphyry is that, if they get it, is that investors have been responding really strongly to good porphyry discoveries of late, right? There's GT is, of course, the most recent standout example of that, but the market is really aware that high grade is relative when you're talking about porphyries, but that high-grade porphyries are valuable assets, and so if this works, the market will respond favorably, and it will be amplified by the fact that Troubadour only has 21 million shares out. So the Eloro is another potential for discovery story, but I throw in the word strategic here because a big part of the Eloro story is where this project is located. So it's in the Mulatos Gold District, so geologically that works great. Mulatos is littered with high sulfidation epithermal gold deposits. There's lots of them. The property that they own, Los Venados, hasn't had a lot of exploration, so that's good in itself. But what's really interesting is how it's located. So you've got Alamos Gold surrounding the project on one side. You've got Agnico Eagle surrounding the project on the other side. They both have operating mines within, like one's 800 meters away from the target, one's a few kilometers. Once a company like Alamos or Agnico has put in the money to set up an operation in a place, to set up a mine, they want to keep that operation going for as long as possible. That's just capital smarts. And so if there's a discovery on this asset, there will be strategic interest in that discovery almost immediately. And Agnico has already tipped its hand in that. Agnico has already invested in Eloro, after trying to buy the project from them, actually, has already invested in Eloro to get their foot in the door even before drills have started turning. So the drills are going to start there within a few weeks. So a really interesting strategic discovery potential there. And again, a nice tight share structure. You want your early stage explorers especially to have tight share structures. Now we have Terax, who's slightly more advanced, again, somebody we're going to hear from shortly, more advanced than some of the ones that I've just been talking to. They've been working their Yellowknife City Gold project for quite a few years, but I throw in the word district scale here because, first of all, their land package is 780 square kilometers. You don't just want a big land package so you can say, we have 780 square kilometers. But of course, they have all of that ground for good reason. And it's because this is an area that hosted two of the highest grade gold mines that ever operated in Canada, the Con Mine and the Giant Mine. They produced collectively 14 million ounces of gold from really high grade rock. And then there were environmental issues and labor issues that sort of soured people's attitudes about the area for a long time and left it unexplored. And then Terax was like, well, wait a sec. Just because there were issues doesn't mean that there have to be issues. Let's go and look around here. And they have 6 solid zones, developing deposits that they've already delineated in some parts of their property. They've spent this summer prospecting a whole bunch of the rest, which is ground that they added, because you want to make sure you look at the ground to make sure you're not missing an obvious thing that you should be drilling before you go back and focus on, okay, now they're going to go back, take these zones where they know that there's gold, and quite a few of them have some really high-grade gold, like 60 grams over 8 meters. They're going to go back and really flesh those out a bit more in order to come out with an initial resource, which they haven't done yet. And I think that resource is going to surprise the market to the upside because it's been difficult a little bit for investors to follow the story because it's such a big land package, there's lots of targets. But at the end of the day, these targets are actually pretty close together. They're very high grade, and they're about to go out and sort of pull that whole story together. And when you have a district scale opportunity, that matters to potential acquirers. If they want to move into, if they're interested in establishing an operation in a new area, they want that area to have lots of potential. They want lots of ground, they want lots of targets, they want lots of potential. And so that's one of the things, certainly, that the Yellowknife City Gold Project has to offer. Erdene, also on stage with me at the moment, is, again, more advanced. This is the process that we're going through. So Erdene is at the stage that I would call sort of demonstrating resource value. Erdene is in Mongolia. This is a team that has more experience and knowledge about Mongolian geology than I would say anybody in the world. They've been there for 20 years. They have, in those years, distilled their focus down to what's now being called the Kundi district. Again, district scale plays matter if you're looking to get some attention from a major who might be thinking of moving into a new area. So this is a huge mineralized trend that's now anchored by 2 good deposits. The first resource came out for Bayan Kundi, which is the gold-focused asset there. Now, Bayan Kundi, the market got really excited about it because it can generate some incredibly high-grade zones, and those zones are very consistent and they're near surface, which is really great. But it's also, those zones are surrounded by a disseminated gold body, which actually makes it even better because then you can open pit the deposit rather than trying to track structures underground just for the high grade. The interesting thing there is that the market kind of wanted the resource estimate to be a bonanza grade, but that missed the mark. Really what this is a near surface, like at surface, well mineralized, new discovery in a region that is littered with potential. All of those red dots on that target, which is 25 by 10 kilometers, have a lot of opportunity. So the resource actually did exactly what I thought it was going to do and what the company thought it was going to do. The market was a little, I think, off the mark in its expectations. But now, I think it's about to reset in that Erdene is preparing its initial mine plan, just wrapping economics around this thing for the first time. Let's do a PEA and demonstrate how, if you take Bayan Kundi and you take the other deposit, which is Altan Nar, and you mine them together, and that works, that already works very well. I think it's going to work quite well based on what's there. And then once you've established that concept, then other discoveries that you make in the area, all those other red dots, fit into that mine plan and the market understands what it is that you're doing. So I'm really optimistic about the scale of opportunity here and the reset in terms of the market understanding what the point is with Erdene. So Integra is definitely at the stage of demonstrating resource value. They have this very large lower grade open pitable resource at the Delamar and Florida Mountain projects. This is where there's been super high grade underground mining historically, and then Kinross did this open pit operation more recently. It's a two-pronged opportunity. The first opportunity there is to demonstrate the value in the resource that sits there. And I think George, in the Q&A yesterday, answered the question that I posed, which was, well, why is the market sort of discounting the ounces that you have? Like, you're not getting a very good enterprise value per ounce in the ground for what you have. And he said, well, people still wonder why Kinross gave this asset up. And fair enough. People are always going to wonder, why did Kinross give you 3 million ounces of gold equivalent for not very much money? And the answer is because when a company like Kinross decides to close a mine and move on, they move on a lot of times, and they don't necessarily step back and reassess those questions. And then you get a new team in with new ideas and new energy, and they take this asset, and now they're staking ground that has, you know, multi-gram gold that's just right adjacent. But it just takes that new energy, that new idea, and they're coming in, they're growing the deposit that exists, they're finding new high grade, there's targets everywhere. So I think this is a really exciting exploration story that's grounded by a very significant resource already. Tinka, also on stage with me right now. Zinc. So a lot of the stories that I've been talking about have been gold stories. It's also important to make sure that your portfolio has a range of commodities in it, like I mentioned. And so Iowilca is one of the biggest high-grade zinc assets out there, especially if you want advanced zinc assets. And Tinka is in the process of putting together an initial mine plan around Iowilca. The two things that matter, I think, in the near term for Tinka are, first, they've done 20,000 meters of drilling recently, since the last resource estimate. That drilling has absolutely made the resource better. It's made it more continuous, and it's made it bigger. And more continuous is especially important when you start wrapping a mine plan around, right? You want to be able to have a continuous body of mineralization that you tap into. They're about to do that with a mine plan. And so, again, this is about demonstrating the value of a really good resource. There's also an indium credit there, which is a good thing. It's not a penalty, it's a credit. And there's also a discrete tin resource, which should sort of deserve a whole bunch of attention on its own, but we just don't really focus on it, don't want to confuse the story. But tin's very valuable, and there's a discrete tin resource there as well. Tinka's got all this news coming. They got $13 million in the bank, and it's a real takeout target, in my opinion. Continuing with zinc, but moving on to a mine planning stage, we have Vendetta. This is the Pegmont project in Australia. It's not the biggest or highest grade resource, but when I talk about multiple ways to win, the situation here is one of strategic interest. So the PEA that's going to come out will show that it makes sense to mine this asset as is, on its own, standalone. It already can support that. But the odds of that happening are fairly low because there's these two other mines really nearby who do want that ore. Cannington is the obvious one. It needs to boost its throughput to make up for declining ore grades, and the easiest, best way to do that is for it to have the Pegmont deposit in its books. So this is a great, another great sort of strategic interest situation, and one that I think, again, diversifies you with some exposure to zinc. Then we get to a company that's actually building a mine. We don't have a huge number of those here today. Again, a lot of us tend towards the exploration excitement end of the spectrum, but mine building is mine building, and Orezone, when you're looking at a company that's building a mine, there's a few boxes that you really want checked. You want it to be permitted. It's completely permitted. You want the capex to be manageable. It absolutely is. And in this situation, Orezone has basically already done the equity raise, so done the financing aspect of the capital raise, and in doing that, they brought in resource capital funds and a Burkina Faso fund. So really strong shareholders joined to give them the equity part of the money that they need to build this mine. So huge box checked there. It's a simple mine. It's a free digging, shallow open pit with simple metallurgy. It's a good size, 100,000 ounces a year, quite likely more if they tap into some of the upside opportunities, and generates a fantastic IRR. So there's always risks when you build a mine. You never know for sure that it's going to work until it's going, but the team that's doing this is very strong, and the simplicity of the situation bodes well for all of that. So again, a takeout target in my estimation. And then finally, talk about some different business models. Throw in the royalty companies. Now, EMX used to always fall into the project generator category, but over the last few years, they have specifically rotated that to, they changed their name even to EMX Royalty. The whole concept here is that they always generated projects, farmed them out, and retained a royalty. Now they're at a stage where those royalties are paying a good amount of money, enough that all of their global exploration is now funded by royalty income and project payments related to projects that are farmed out. So it's a self-sustaining business model as is. Then you throw in the fact that they just got paid almost $90 million for their stake in this huge copper project in the far east of Russia. That just shows you what this team can do, what this really strong technical team can do when it's given an opportunity. And I would call $90 million an opportunity. So I think they're going to go out there and do some really interesting digging to see what they can add to their royalty portfolio, add to their project portfolio with this investment, with this huge influx of cash. So yes, I think, and undervalued on an enterprise value situation. They're more than half of their market cap right now is just based on cash in the bank. So those are the companies that I own. I'm not even going to try and summarize that because I started with that, hopefully. Hopefully it all made sense in some sort of form. I will move on instead